Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 11th of April. I'm Daniel Lam, and I'm back as your host for the podcast. After, quote-unquote, surviving the test over the last 10 days. So, as I mentioned, I brought my 3.5-year-old boy to Shanghai alone for 4 days. And immediately after that, I competed in the 4-day selection tournament to represent Hong Kong, China at chess in the Asian Games later this year. It was truly the most intense tournament in my entire life. The odds heavily stacked against me as I'm nearly 3 times older than over 70% of my competitors. And on the family front, my wife is near delivery, and my son fell ill during the tournament, which caused us a lot of distress. But thank God, I still managed to qualify with 1 game to spare. And in finance, it seems that the US markets survived the test last night as well. It opened low across key indicators such as the S&P 500 index and managed to close about flat. It was the first US trading day since last Friday's jobs report, which came in broadly in line with consensus estimates. Non-farm payroll employment slowed from 326,000 to 236,000 in March. Increases in service sector and government employment offset declines in the goods-producing sector, with leisure and hospitality once again accounting for the most employment gains. Meanwhile, the household survey results show the unemployment rate ticked down from 3.6% to 3.5%. The annual rate of increase in average hourly earnings decelerated to a near 2-year low of 4.2% year-on-year, which is slightly below expectations of 4.3%. So the labor market is softening, but it still remains somewhat tight, which means that a recession may not be imminent. Despite the slowdown in the pace of non-farm payroll employment, the March figure remains more than double the 100,000 jobs per month that Fed Chair Jay Powell discussed in a November speech as the pace needed to accommodate population growth over time. Once again, we advocate our safe strategy, with US 10-year yield facing resistance at 3.6%. We continue to like bonds over equities and see multi-asset income strategies as an attractive and diversified way to navigate this challenging global growth outlook. We like high-quality government bonds and would reduce exposure to high-yield debt. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.